Sydney, Brisbane, Adelaide and Perth have all just hit an all-time high with their house prices. Affordability right now is probably its worst it's been in decades. So let's make sense of what's happening and why so many people are out there stressed and anxious and at the same time calling for a drop in prices, yet we're seeing most of the market continue further. If you're interested in what my thoughts are, then definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Now, before we jump into finding out what's happening in the market right now, if you're sitting on the fence going, I need to make a move, I don't know if it's too late to make a move, if this is the right time to buy, I would urge you to start talking to the right people. If you need the help when it comes to chatting to people that are in the space, then definitely reach out to us. All you have to do is look up searchproperty.com.au. You can book in a call, you can chat to our consulting team. They can guide you where you're at and where you want to be a lot easier than you sitting there and just being confused. With the market moving at the pace it's moving, you need to be moving with speed. Stressed, overwhelmed, and anxious, cost of living crisis hampers first home buyer plans. Nearly 2/3 of first home buyers are feeling pessimistic about the current property market, with 56% citing the cost of living crisis as affecting their plans to purchase a home, new research shows. Only 20% of first home buyers believe it's a good time to buy property, although they do think it's more favorable time for selling or investing. The primary factor delaying first home buyers is the cost of living crisis, closely followed by property prices. Now I'm going to pause here because it says 20% of first home buyers believe it's a good time to buy property. And this is the issue. We get into this analysis paralysis mode where we've never purchased anything. We're so attached to our money, we don't want to make the wrong move. Yet we also may not want to pay for the advice to make the right move. So what ends up happening? You say, okay, I don't want to pay, say, a buyer's agent or someone who's an investment strategist, and you say, I don't want to pay that. Instead, I'm going to wait because I don't know if this is the right time to buy. Now, 20% of first home buyers think it's a good time to buy. That means 80% of people, 80% who have never bought property think it's a bad time to buy. And that's the reason why they're kept out of the market time and time again. Now, I'm not saying that it might be the best time to buy now, or that if it's a better time to buy in 2 years or in 4 years. But I know even for my first time, when I purchased my first property, I didn't know what was going on. I didn't know that there was going to be multiple geopolitical issues. We were going to have some sort of collapse. We were going to see APRA come in, overhaul the banking system. I had just learned about what happened in the GFC and there was a housing bubble. Knowing all of this, I knew one thing for sure, which is I need to be in the market because time in the market is going to be better for me rather than going, hey, I'm just going to sit on the sidelines because I hope the market comes down. Nobody actually knows whether the market's going to go up or down. But from this, 80% of people that have never bought property think it's a bad time to buy. Just keep that in your mind as we go through this video. Now, the top reasons for first home buyers to delay purchasing a property is 56% of people say it's the cost of living, 53% say it's property prices, 49% say it's the economy, 49% say it's increasing interest rates, 42% say supply and availability of property, then 25% say slowing interest rate hikes, which doesn't really make sense as to why you would delay that. And 21% say anticipating a change in government. And there's an upcoming election, but that's not for a while. So that shouldn't really be a factor that you play in right now. Now, if you are thinking about the US market and the fact that there is an election happening very soon, depending on when you're watching it, it's probably already happened. But I can see that might be some volatility. But let's be real. Whoever wins, they end up doing nothing anyway. They have a bunch of promises that they never deliver on, and then 4 years later, you're back to square one, and then you choose the next person. That's my take on politics. Now, it could be pessimistic, because most people are pessimistic about the property market, but I'm pessimistic about the leaders that lead this country. But this is not a politics channel. Let's continue. Half of the first home buyers have paused their plans due to economic concerns and rising interest rates. Alarmingly, 41% of first home buyers feel their financial situation has deteriorated over the past year, compared with 31% who say it has improved. A significant factor impacting first home buyers' finances is the proportion of income spent on rent or if they have recently bought their mortgage repayments. 2 out of 5 first home buyers are spending more than 30% of their income on rent or home loan repayments, putting pressure on their financial position. I remember a couple of years ago when 30% was the rule, that if people were spending 30% or above that, they were in a stressful financial position. So if you were spending more than 30% on rent or towards your mortgage repayments, it was a bad thing. Now it seems like it's almost impossible to be under 30%. So if you're the lucky few that have your repayments or your rent being less than 30% of your entire budget, well done. And the way to calculate this would be to look at your overall income after taxes and how much goes towards your actual rent. So for instance, if you're making $100,000 after expenses and your rent for the year is costing say $25,000, then that means 25% of your income goes towards rent. And that would actually put you in a strong position. Right now, what we're seeing is probably 40, 50, and in some cases above 80% of people's income goes towards their housing needs. Now, this ties in really well with how affordability is a concern. Now, housing affordability is now at its worst level on record according to PropTrack's Housing Affordability Index. After a year of higher interest rates and home price growth, even fewer households are able to achieve their dream of owning a home. The decline in housing affordability is a result of continued high mortgage rates at levels last seen in 2011. Combined with home price growth equivalent to $50,000 increase in the national median house price over the past 12 months. That effectively means that the median house price across Australia has increased by about $4,000 every single month, almost $1,000 per week. I broke this down in a video and you should definitely go check it out because it puts things into perspective of how quickly this market's moving. We see online, we say, okay, well, Sydney's gone up from 1.5 to 1.6. You see something like Perth has gone from like 500 to 650K. You're like, okay, like market's getting more expensive. But if you're sitting on the sidelines and you sit there and say, okay, well, I'm not gonna enter because it might not be a great time. If you calculate your hourly rate, you calculate your daily rate from the income you earn, and then you put it up against being in assets, you're gonna be really surprised. Now, you may not wanna do this because it is very scary. And I know that I've done this with a couple of people and they were like shocked when they found out how much they were losing by not being in the market. Now, I know some people might say, well, you know, property is not everything, and I agree, but investing is everything, and I don't care what you say about that, because if you're saving, you're basically saving a currency that's lost more than 90% of its value over the last 100 years. So you can't save your money, and you need to be investing that. And you need to have that growth mindset, thinking about how you can grow your nest egg and continue to add on to that. And at some point, you'll be able to reap the rewards of that machine later on. Now, this is the PropTrack Housing Affordability Index. And what we can see is that we started seeing a decline in affordability all the way back in the 1990s. And what we did see is a sharp drop off up until the GFC. And then from there, it's pretty much increased from that point. However, it's been on a complete slide since then. We are now at a point where it's the lowest on record. Now, this table here is going to be surprising because it's the affordable share of homes for medium income households. And what you can see is the average is about 14% across Australia. New South Wales is one of the lowest, along with Tasmania at 10% and 9% respectively. But this is where the big question mark comes in around whether you should buy in Perth or not, whether you should invest in Perth or not, because they have the largest portion of affordable share of homes across their median income there. Now, you might be thinking, is it a good time to buy in Perth? Is it not a good time? Because there's some people that talk about how it's going to collapse and others say that it's going to continue going higher. If you want my thoughts around what's going to happen in Perth, definitely comment down below saying invest in Perth, ? And I'll make that video for you guys as well. Now, here's another table that makes me really question how things are actually perceived out there. Time to save a deposit by state. It suggests that it takes 5.6 years to buy a home in Australia. And this would be based on a 20% of the median priced home. This is where the real issue is, that we don't have the same rules that we had, say, 100 years ago, where you could only purchase with a certain amount of deposit. You can get in for much lower than a 20% deposit. So if you were to look at that, it's actually not that bad. If you were to just save for 10%, it would mean that you would only have to look at 3 years or 4 years before you got to that point. And that's why some of these graphs or some of the headlines that come out saying it's going to take 15 years to buy a property, it's actually a load of crap. And if you're interested in just buying a home, then yeah, it might cost a lot more depending on where you live. But if you're out there saying, I just want to invest, I want my money to work for me, build this machine, and then at some point I can use that machine to come back into my dream home, that makes a lot more sense to me. And if you're wanting to do that, it's going to take you less than 12 months, depending on where you start, of course, to get into the property market. Because say you're living in Sydney, like myself, and you look at the median house prices and they're like 1.6 million. You're like, I'm not going to be able to afford this. But if I want to really buy a house and I can afford something for 500 or 600K, you can go into a different state. But you just might not know where to look and how to look for that. And that's why I provide that service around Search Property, the buyer's agency, because that's exactly what we specialize in. You wouldn't just go out there and say, okay, I'm gonna learn something completely new, spend the next 6 months as the market continues higher, and all that money that you've lost is time in the market. You're out there, treat this like a business. Just like you might pay for Xero to get your accounting needs, just like you go out there to get a domain, you pay GoDaddy or you crazy domains or Squarespace. You need to almost pay to play at the speed that you need to keep up with things. I can appreciate that it is a very difficult time. There is so many conflicting arguments around whether to buy or not to buy. If you look back at the long-term averages of all assets, they pretty much go up because the currency they're denominated in always goes down. So you would rather be in the market than out of the market. That's the first thing. Number two, what you want to do is focus on the right areas and focus on the right assets. Even if you went out there and you just focused on shares, it's not that every share is going to go up by 100%. There's going to be some that actually go down to zero. So you want to be very careful with your research process and just keep in mind speed. Because if you are ready and you're wanting to go, you need speed on your site. Because another 6 months means that being out of the market is costing you money. And there's no guarantee that in 6 months it's going to be a better time to buy anyway. I hope you guys have enjoyed this video. If you have, smash that like button and I'll catch you guys in the next one. Thanks guys.